Good afternoon and welcome to the next of our essential series, LinkedIn Live. These are topical, engaging, technical webinars on wealth and wellness by leaders in the private client world. I'm Lottie, founder of the Jura Society, network and private client consultancy focusing on women, wealth and well-being. Today we're joined by Kate and India from Argenta Private Capital, and over the next half hour they'll be telling you all about Lloyd's of London and how to invest in a diversified portfolio. So I am going to let them in and share all of their wisdom with you.
Thank you, Lottie. Welcome, everybody. Sorry, I'm just making sure that we've put the slides up. There we go. Brilliant. So welcome and thank you for joining us today. And Lottie, thank you for being such a wonderful host. Let me flick onto obviously we have to have a disclaimer and we will go quickly through the agenda. So we hope that that you're going to walk away from this session with an understanding of the Lloyd's market and how it works, which can appear to be quite complex at times. So what we're aiming to do is to talk about the benefits of investing in Lloyd's and demystify some of the common misconceptions people sometimes have. So here we have a timeline of the history of Lloyd's. It's albeit a very basic one. So let's go back to the very beginning. Now, Lloyd's is a market that can trace its roots back over 300 years. So the Lloyd's market was founded in Edward Lloyd's coffee shop in 1688. The industry was born out of maritime insurance. Edward Lloyd would entertain ship owners at the coffee shop, which is where risk was discussed. It was here that the ship owners would get cover for their ships should they not return. So fast forward some years and you'll see that on the timeline that Lloyd specialises in some hard to place or hard to understand business. For instance, in recent years, Lloyd's has become the market leader in cyber insurance, with around 30% of global cyber insurance underwritten at Lloyd's today. So let's go on to the Lloyd's market and how it works. So looking at this slide, some of you will be familiar with the names on the slide. So some of you will have a little bit more knowledge than others on the insurance industry and will therefore recognise the big names, some from insurance, obviously, and some from sponsorship. So nonetheless, they are participants in the Lloyd's market. On the left, we have a number of underwriters, and on the right, we have a number of brokers. Now, the Lloyd's of London, now, obviously the mechanics are extremely important, so I think we need to understand how it works. So this is a very simplified diagram of how the business, of how things flow in the sort of industry. So policyholders sit on the left-hand side of the chart, whose business enters the Lloyd's market through the brokers, such as Howden, Gallagher's and Marsh. It's via brokers that the policy needing cover reaches the underwriters, for instance, the Hiscoxes, the Beasleys and the Blenheims of the world, who sit in the middle of the diagram. So an underwriter works on behalf of a syndicate, which is an underwriting entity formed from a member of or multiple members of Lloyd's of London. Apologies. So we sit on the right-hand side of the chart, advising members, our clients, who put capital behind the Lloyd's syndicates to enable them to take on risk. We'll cover this in a bit more detail later on. So Lloyd's of London, what it does. So for starters, we often have the issue that people assume that we are associated with the bank. We are not. So the Lloyd's global footprint. Now, Lloyd's is a truly international business. It is a license to write insurance and reinsurance business in almost every country of the world. It is nonetheless heavily biased towards the largest insurance buying economies in the world. And this map shows the location of the physical risk, which, as you can see, is heavily dominated by risks in the USA and in Canada. So there are more than 60 lines of business, and here we have the split of the market in 2021. So there are some large and well-known classes, such as US property insurance and cyber, but equally a host of smaller classes. Some of you may well know that there are specialist areas such as energy, aviation, shipping, terrorism, professional indemnity, and property insurance. So here are some figures on the market that indicate just the size of the market. So at present, there are over 2,000 private investors who are currently underwriting 4.8 billion pounds. This is excluding corporate investors. So the market is made up of 86 syndicates and over 380 brokers. So let's go into go back to where we fit in. So you're probably thinking, where does Argenta fit in? You know, it's a really good question. So let's go back to the diagram we looked at the beginning of the presentation. So we sit on the right-hand side. Argenta Private Capital, or otherwise known as APCL, is a capital advisor known as a member's agent. When you become an investor in Lloyd's, you are referred to as a Lloyd's member. The only way for private individuals to invest in the Lloyd's market is through one of the 3 members agents in the market. So who do we work with? Well, we work with a number of different categories. So financial intermediaries, professional intermediaries, and individuals who come to us directly. The bulk of our clients, by number, are the 500 high net worth and ultra high net worth clients, many of whom have been clients for some years. But recently, our client base has become younger and perhaps arguably more professional, with an increase in financially astute clients who are alive to the benefits of investing at Lloyd's. Some of whom have found their way to us via their bankers, wealth managers, advisors, etc. Some of whom have found their way to us via word of mouth. So I'm going to pass over to Kate now, who is going to delve into some of the interests and why you might consider investing in the Lloyd's market.
Thank you, India. So there are a wide variety of reasons as to why somebody might consider investing in Lloyd's. If you wouldn't mind just flicking on to the next. Thank you. So our traditional clients chose to invest in Lloyd's because they've inherited large sums of money and other assets through inheritance, or similarly are looking to pass wealth on to future generations. And they're particularly interested in the tax efficiencies a Lloyd investment provides, but we'll come on to that shortly. More recently, as India said, we've seen a rise in professional investors with high annual revenue and individuals who may have exited their businesses and are looking to further diversify their portfolio of investments. So many of us are aware inheritance tax can be a burden to families, particularly when they've recently lost a family member or a loved one. At present, for an estate worth north of 325,000, the inheritance tax rate is a weighty 40%. This large bill will normally be paid out of an estate, so upon the sale of a property or the redemption of investments. And whilst inheritance tax is not the largest source of revenue for the government, in 21-22 tax year, around 6 billion was paid in inheritance tax in the UK. Now, because of the unique way the Lloyd's market works, with capital providers or members supporting a syndicate or portfolio of syndicates who outsource the underwriting of risk to underwriters, the capital provider itself is said to be underwriting. And therefore, an investment at Lloyd's is treated as a trade for inheritance tax purposes and can qualify for business relief. So our clients can pass on their Lloyd's assets to their heirs free from inheritance tax. We work with new investors and existing clients to ensure that their investment in Lloyd's is structured in a tax-efficient manner and allows for the passing of wealth to the next generation. So a second benefit is the low correlation the Lloyd's market has to other asset classes. The importance of diversifying a portfolio is spoken about more and more frequently, particularly given the volatility of certain markets. During the recession of 2008, according to our data, UK equities reached a loss of nearly 30%, and this was closely followed by commercial property loss of 27.6%. This colourful slide shows how Lloyd's returns compare to returns from other asset classes, And this data has been sourced from an investment house and shows for 8 different assets the annual performance for years 2008 to 2013. Alongside those returns, we've included Argenta's clients' average returns for the period. I'm not sure anything demonstrates the lack of correlation in the Lloyd's market has to traditional asset classes more than going back to 2008, where Lloyd's was in fact making a profit of 17.7%. This slide also demonstrates that Lloyd's returns are cyclical, and that for 9 out of the 16 years shown, Lloyd's has been in the top 3 performing markets in this table. Now that leads me nicely onto Lloyd's historical returns. And if you wouldn't mind flicking on again, please, India. As briefly mentioned, the Lloyd's market is cyclical. Losses and the availability of capital drive the rates underwriters can charge when they take on a risk. You will have noticed your insurances are particularly costly at present, as we're in what we call a hard market. So where insurers can charge more for taking on a risk, the returns for investors are expected to be higher. With our clients, returns for the 2023 year are expected to be north of 23% return on capital. On that note, I should probably highlight that the Lloyd's accounting is done on a 3-year basis. Whilst the 2023 return is shown in the 2023 year on this graph, the result or the profit will not be distributed until 2026. The 3-year accounting allows underwriters to gain certainty over the level of claims arising in that year. And the reason for this is historical. If a ship hadn't returned after 3 years, it was almost certain that it wasn't going to. This also explains why you can see on the graph we talk about forecast results for 2022, 2023, because the results are still maturing. We're very much aware that the perception that Lloyd's is considered to deliver volatile returns with frequent large losses, but the return history belies this. In fact, the worst loss on capital, as you can see on the graph, in the last 22 years was the loss in 2017, when the market experienced 3 of the largest hurricanes ever, with hurricanes Harvey, Irma, and Maria. And the final key benefit, and some may say I've saved the best till last. What if your existing portfolio of investments could serve a dual purpose? Investing in Lloyd's is a unique investment whereby investors pledge their assets to act as backstop capital for the underwriters in case claims and expenses exceed premiums. And those assets continue to generate returns for the investors. And those assets can be provided in a variety of different forms, as we can see here. These are called funds at Lloyd's, or FAL. And this slide demonstrates a number of different asset classes that will be accepted as funds at Lloyd's. Cash, bonds, gilts, equity investments. The portfolio itself can remain under an investor's existing investment manager, and the investor can retain the beneficial ownership of the FAL. So effectively, your assets are working twice for you. So I thought I'd just finish with a quote. It's a true story from an investment manager who once said, "What do you get the client who has everything? An investment at Lloyd's." So I really hope we've given you a better understanding of the Lloyd's market, the history, how it works, and why someone might invest. We'd be very happy to meet anybody who's interested to hear more about this topic. And thank you again to Lottie and the Juror Society and to all of you for attending. If anyone has any questions, we'd be happy to take them. Lottie, I'm not sure if anyone's got any questions.
I haven't had any questions through yet.
Stunned silence.
No, I think we did have one that was coming through, but I mean, that was amazing. It's a brilliant overview, and I think it is such an under-explored area. but actually such a valuable area of the markets that can really help with diversifying a portfolio as well, as you say. So bringing that to light is just incredible. Thank you so much. Okay, yes, question coming in. Sorry, what's the minimum investment? So how does it work? Say I was looking to invest with you. What is the minimum investment that we're looking?
So traditional membership, we would say the minimum investment size is around about 1 million.
Mm.
And that should represent no more than 10% of your overall net wealth.
Mm-hmm.
You can use, we talked a little bit about the capital, so you can use bank guarantees against property to support that investment, but we would say no more than 10% as an alternative asset class.
Interesting. And then is there a way that you do the syndicates as well at all?
So the syndicates accounting, you mean? So, so every investor would have a portfolio of syndicates. Those syndicates essentially manage their own investment portfolio themselves, and you receive, as an investor, a share of that underlying investment as well. So that would all be included in the return cycle that I showed you. However, what wasn't included was the return that you might get on your own portfolio that you use to invest.
Yes. Okay. So you're doubling up really on your returns.
Yes.
Brilliant.
Yeah.
That's what we like. It's very clever. Recycling your gains.
Doubling the use. Yeah.
Exactly. And can you explain a bit more then about the investment process?
Yes, I mean, we're talking to a lot of potential investors at the moment. There are a number of different ways that you could invest. Traditionally, you would either set your own vehicle up, your own limited company or limited liability partnership. I don't think we mentioned, but now there is no unlimited liability in the Lloyd's market. So every new investor would have set up a vehicle, and the only value that is at risk is the amount that you put into that vehicle. And then we would discuss the appropriate portfolio of syndicates that matches that client's risk profile and ultimate aims of the investment. The other routes in, you might be able to buy an existing company as a going concern. So there's a fairly active market of investors that want to leave, primarily due to age if they don't have any heirs. Or obviously wealth profile as well. There aren't a lot of vehicles up for sale at the moment because it's such a great market. And then the final option is last year we set up a number of what we call starter homes, which are essentially limited companies preloaded with a portfolio that new investors can buy off the shelf and get some access. But yeah, I think start early, come and talk to us.
So that's interesting. So that's almost like having a a pre-packaged portfolio then, really. So it's simplifying it for somebody who just wants to test out, see whether they like it or not. You've already got it done.
Yeah, exactly. It takes a lot of the complexity away by not having to make that decision on year one. And one of the beauties of the Lloyd's market is that 3-year accounting. So every year you can choose a different syndicate. So you pick a portfolio or you go into it with the starter home portfolio. The next year you can completely change it if you want, or you can stick with what you like, know and like. So it's very flexible.
Are there any tax implications if you're doing that? Sorry, careful.
No. So let me onto a complex area. So there are different routes in to the market, as I said, but there are also different mechanisms of interacting with the underlying syndicates. So some syndicates allow investors to participate for free, and some charge a cost to give that access. And that, if you are charged a cost, that is an asset that you hold in the books of the company. So if you were to swap it in, then you might have a chargeable gain. But definitely moving into the complex realms of Lloyd's investing now.
No,
maybe the second
round two.
episode.
Yeah.
Okay.
We'll go into the but that's really helpful, and thank you. And I think the history as well is so fascinating in terms of it starting up in a coffee shop.
Yes.
Like you would just never think that, would you?
Just to add on what Kate said earlier, in terms of next steps, we're very happy to talk to people, and I think we're looking to work with Jura, obviously, to try and come up with some interesting ways to make the Lloyd's market or demonstrate the availability and the history of the Lloyd's market by doing some interesting things around the city. So watch this space.
100%. Yes. Secret tours. Brilliant. Well, thank you so much for answering all of those questions, for giving us such a brilliant overview. And if anybody watching this either live or on the follow-up is interested, then please do reach out and I will put you in touch with Kate or India and they will answer all of your questions.
Thank you, Lottie.
Thank you very much.
Thank you. Bye-bye.